Hey, Dan Passarelli here. Well, today the S&P 500 closed up 0.8% with the spiders closing at 657.63. That is a new all-time high. And what is the reason for that? I don't know. Somebody who does know ought to tell me, because I sure as heck can't figure it out. We had CPI come out this morning, and inflation was just a teeny bit hotter than expected in the month-over-month section. That was 0.4% versus 0.3%. Everything else was kind of in line. There were more jobless claims expected. Maybe that had something to do with it. But more inflation is not good for lowering interest rates, and it's not good for the consumer, and therefore the economy, and it's not good for stock prices. I don't know. It doesn't make really any sense to me. Now, it was interesting that yesterday's PPI reading was so massively below what was expected, which in hindsight, I guess maybe has a lot to do with companies buying products from overseas before tariffs kicked in, keeping their prices low, and the consumers maybe just starting to bear that cost just a little bit. I mean, it was fairly in line with expectations, so I think the jury's still a bit out on that one. But we did have a couple other interesting things happening today, and one of them was in a stock called Opendoor Technologies. Now, this one hit our options rater scanner, which is our scanner for short squeezes. And it just lit it up. I mean, there was just not a million, but thousands and thousands of contracts trading, just showing up on our options rater alone. And yes, indeed, it clearly identified a short squeeze up like 1,000% from two months ago. Yeah, so there is that. And I just want to keep up with this saga here in Nvidia. That one also, yesterday we had a little bit of a pop in there. Well, it's not showing up right now. It kind of pulled back a smidge today. I mean, it closed just about unchanged. But those credit spread sellers, call credit spread sellers, are back with a vengeance. That we saw a lot of them hit credit spread genius, but it's not AI stocks in general, because they were selling put credit spreads in Orcl. Orcl, of course, had just a massive jump on earnings, and especially their conference call following earnings yesterday, because they're backlogged on orders. They just have literally billions of dollars that they've already sold, waiting to fulfill in their AI cloud business, which we talked about briefly yesterday. I think, was that yesterday? I don't know. Kind of all blends together here. So they pulled back just a little bit here today, but there's somebody somewhere out there in the world, some big traders making some pretty big trades, betting that it's not going to go down that much from here. It's going to stay up there. So the Nvidia trades, there we go. As you can see, Orcl put spread, specifically selling the 290 strike, which is about $19 below the money, 10% below the money. So they've given themselves a nice little cushion there. But, they sold thousands of them. Here's 400, 800, 1,300, 2,800, just a lot of them. A lot. So, yeah, that's definitely not a bet against AI by any stretch of the imagination. It's more just maybe a bit of a bet on changing the guard of a cyclical activity. Hope that helps. This is Dan Passarelli. Trade smart.